Right, so today I'm going to be focusing on stopping action. So stopping action is climaxes. And why it's important is that you can use it intraday to buy pullbacks. So let me just explain. The idea here is when you have a rally and a pullback, you want to buy the pullback, right? So this leg here on a lower time frame is going to look like this. This pullback leg is going to look like this. And what we want to see is, in terms of pullback, is there a climax here, which is also known as stopping action. Okay, and then I will, and this will be done on a lower time frame. But at the same time, I'll show you how to do this on, whatever higher time frame you use. And this can be used on very low time frames, like 5 minute or even lower, 3 minute. And these waves can be on 10-second bars using this combination, right? So you can do all this. I'm not saying the wave will be 10 seconds. I'm saying each bar will be 10 seconds. So there's ways to do this specifically for intraday. So I'll just show you guys how to do it. All right? So anyway, the point is, remember, the objective is to learn how to buy pullbacks. All right? Why? Because they have the best risk reward and all of that. So here's an example. We'll just start. This was the open, and we'll just start with the move down. So consider this a rally, and then this is a pullback. Why? Because it's the open, and then we'll move throughout the end of the day. So this is your regular time frame that you're looking at, and this is your lower time frame wave chart. You use whatever combination you want, doesn't really matter, but you need to have a wave chart because that's important. All right, so we have our first rally of 24 minutes, and we like it. Why? Because it's in a trend. They have volume right here, breakout, and we want to buy it on the test of the volume area. So it's just pulling back. So what we want to do is look for climactic action, and you have 1, 2, 3, 4, 5, 6, 7, and this really is just this wave. So at the end of the wave there should be climactic action, and lo and behold, you get climactic action right there, big red. So already we see that the market rallied, pulled back. As it pulled back, it created this lower time frame trend, and had stopping action right here, big red. Okay, so so we have stopping action, and you can also see that the volumes increase. This is not really volume, it's a change in volume, and I'll teach you guys about this as well. All right, but after that it bounces, and again climax is right here, right? And has no fall through, immediately reverses, identifying selling climax. Same thing, like you have this heavy volume. This is actually a spring of this. This is the climax. This is your bounce, and then it just brings it. Okay, your demand and all of that. All right. So now let's just let's look for the next pullback, rally and pullback, and see if the same stopping action exists. Again, we're looking at this as a phenomenon that, does this happen on the regular, meaning it happens as a principle. So we have this 30-minute rally, and we're looking at it and said, okay, well, we have the 21-minute rally, but it didn't pull back. Then we had a 30-minute rally, and we really want to buy the pullback because we missed it over here. And let's say we missed it over here. So, like, okay, maybe we get one more leg up, let's buy it, right? So what we're going to do is, as it's pulling back, we need to go long. And we're going to do this after the stopping action. So we'll go to the top of the rally right here. Right, so this is a 30-minute rally. As it pulls back, we are looking for stopping action. All right. Especially, just a word of advice, there's a tendency to test high volume areas. So, typically it's going to go into the high volume area and spit out high volume. So you'll see. So now we start from here to here. Already we see the change in behavior, right? So we mark this. Now it comes back. We want to see a trend, and here we have a legitimate climactic move. 3.6 times average down volume. 3.6 times average down volume. Right here. That's the stopping action. And again, you don't really know until you have all the secondary tests. So you just look for the secondary test. It's right here. It's a secondary test. This 3.6 and this 0.5. Again, 3.6, 0.5. In the middle, you have your little rally, the 1.7, right? The climax automatic rally, secondary test. The real thing is just this climax. You need the stopping action. And you need it retested. So we have it here, right? And we see on that bar, the volume increased by 17%. Right, so if you, what I do, let's mess something up. So let's get rid of this. Let's add, see this? It's a little bump right here. Usually I like it to spike a little bit more, but it's not totally evident from this little spike, right? It's more evident from the wave. That's why bar volume, you have to really know how to work with it. And that I'll show you guys later, right? But the idea here is that it's pulling back. You know that these are high volume areas right here, right? High volume areas get retested. It's just so you can count that it's going to go pull back. So it does pull back, and this is your heavy selling. But do you know, okay, that this is the selling climax? How do you know it's not going to go lower? So for that, you need a secondary test. You need some types of automatic rally, and you need to start breaking out to the upside. That's what happens, right? So, all right, now let's do it again. So let's see the next one. All right, then you know, this one here is not really that deep, so it's going to be very hard to, you know, I mean, it's there, like right here. You can tell, but to be frank, I would think there's some type of change in behavior, or at least this was change in behavior. This is very obviously looking. Look at a big red, at this climactic action. So, I mean, I wouldn't really know that this climactic action until after these breakouts, right? So all this I can't really tell, but when I see these breaks, I know there's something that, yeah, it's possible this is climactic action. Why? Because of the breakout on the lower on the lower time frame. All right, now let's move. Okay, so now we're going to analyze this top. The hell with the top. Let's analyze bottoms. You know, this move goes down. We want to know if it's climactic or not. My indicators, they automatically pick this stuff up to the best that they can. You know, given what I got, right here it says it's climactic, and it obviously is. But let's see, because you need a wave chart to see it clearer, right? So from this high, it cracks right here. From this high, you know, it cracks, and the first thing I notice is this high volume level got taken out. It didn't get tested, it got taken out. So, you know, you want the high volume areas to get tested, but for them to hold. Like here, you have this high volume area, it holds. Here, you have high volume area, it holds. Here, you have high volume area, it gets broken with another high volumes. Anyway, so it goes down, 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 down. I want to know if this is a climactic action or not. Right? So, how it, you know, this is the selling, and this is climactic action. So the first thing is, I don't know whether this is a climactic action without secondary tests. No secondary test means who the hell knows what it is. So we see this, and then we see this. That is a secondary test. So at the worst, it's going to go sideways. Worst case scenario is going to go sideways. If it doesn't pop up, it's going to go sideways. Right? So you might be wondering, oh, yeah, why not this? Why is the high volume? Isn't it a climactic action? Well, if you see 6.2, it's not. It's heavy volume, but the market hasn't completely liquidated because of this. The selling is still there. See, what happens is you need to see selling, and then you have to have evidence that it dried up. So there's two evidences that it dried up. The ability for there to be an automatic rally and the secondary test. That secondary test is, I think, the key, because it means that they tried to sell again, but there's nothing there to sell. So liquidation is complete. So here, you have 3.2 and then 0.7. Look at this. It goes from here to here. Look at that. Don't you see a significant drop in selling? That is evidence that the liquidation is complete, at least for the time being. Market goes up. Just like right here, if you look carefully, you'll see that this is actually a buying climax. Indicator found it, and the evidence is, you know, right here to here. You got the secondary test point 0.6, 0.2, 0.4, 0.3. Evidence. Evidence of what? Secondary tests, no volume. What does that mean? Trend change. Also, the other thing I like to see is this one should be bigger than this. So that's like the automatic rally in the secondary test. The automatic rally obviously has to have more volume than the secondary test. So for example, here you have 1.6 and 0.6. So 1.6 and 0.6. So you have your climax, automatic rally, secondary tests, game over. Now we're going to analyze it some more, and we're going to see the climactic action here. All right. It goes down, 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 and bingo, right there. Right there. Let me delete this. All right. Look at this. Heavy, heavy selling. And the secondary test. See that? Heavy selling, secondary test. Supply is gone. And demand comes in and they pop it up. Right? But the key is, I'm not really interested in all this shit. I'm interested in the evidence of stopping action and its secondary test. Why? Because that's what changes trends. So we have this trend, climax, secondary test, which created that move. We have this climax, secondary tests, which created that move. We have this climax, secondary test, which created the bounce. Let's see more. It wasn't big bounce, but whatever. Yes, and you know, you go towards the end of the day, you can't really see much. So. And it's the end of the day buying activity, so. I don't have this end of day after, market closed, right? So what do we learn from this? Look at all the climax secondary tests. Right? So all the way back. The first one is this rally, and we want to buy the pullback when it goes to the high volume area. When it tests the high volume area. So we want to see a climax, a selling climax. So rally and then pulls back to that area. Here you go. This is your climax and your secondary test. Climax, secondary test. Bounces. And finally, we get the next one here. And we know where to look for it too. It's going to be on this high volume thing, right? So right here, you have your climax and your secondary test. Right? What happens after that? We're looking for automatic rallies and breakouts to go long. Alright, so for example, this whole thing, I guess it's near the open, so it's a little bit challenging. But, you know, right around here, the demand comes in, time to go long. Here, just wait for it. You know, you have your climax, secondary test, it starts breaking out to the upside. Climax, secondary test, starts breaking out to the upside. This is like a little shitty climax, but you still have the breakouts to the upside. I wouldn't take this, there's no secondary test. Climax, secondary test, breakouts to the upside. Climax, secondary test, breakout to the upside. Okay. Climax, secondary test, breakouts to the upside. Time to go long. Climax right there. Who am I? Yeah, I don't have any more. But I guess, you know, you see the idea. The idea is a very simple one. You have, you have a trend, you have a rally, and you want to buy the pullback. You want to go to a high volume area, and then you want to look for stopping action, which is your climax, and then you have your secondary test, and then your trigger to go long, the breakout. And a lot of times when you have your climax and secondary test, you have the automatic rally or, you know, that buying strength. But to be frank, the automatic rally, what you learn is that, you know, the climax, automatic rally, secondary test. But a lot of times it's climax, secondary test, then automatic rally. So the automatic rally could be in the middle or it could be here. And that's your, basically, this is your sign of strength. Right? The trigger here is the breakout after the climax secondary test. You know, a breakout. Right? So you have high volume, you have rally, you have a test of high volume area, and then you have a sequence of climax secondary tests, and then they break out to the upside, which to me looks like the trigger. I just showed you that. So, you know, this was the, even if you want to get in here, it would be the climax, secondary test, right? In this case, I think you can, this would qualify as an automatic rally. And then there's the breakout. Here you have your climax. Right here. You got your secondary test. Then you have your breakout. Climax, secondary test, breakout. All right. So now, what qualifies the climax? What are the thresholds and stuff like that? That's very, very difficult to define, but it's a big red wave. All right. And there's a couple of ways to do it. Let's say, you know, you have like this white indicator here. I think that's, I don't know what it is. I think it's double the average down volume. So if it breaks double the average down volume, like this number here, 3.6, it's obviously not normal. So that would be climactic. 5.3, obviously change of behavior, or if it's at the end of the trend, it's climactic. You know, here, look at this. 5.1, strong buying activity. 9.7, that's because it's the open. Right? So anyway, hope you enjoyed this. This is far more practical than looking at a schematic, and that's because you can see that at the end of this turning point there was a climax, at the end of this turning point there was a climax, multiple times, and at this turning point climax, and at this turning point a climax. So, alright, take care.